From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, which makes it just gone UTC. A big shout out to everybody that's joining the stream live today, as well as everybody that's watching it on recording. A big shout out also to Wack, who just nipped in first, moral by an absolute hair. These guys have been fighting it out over the last week or so, but honestly, awesome to see you all. I hope you're all doing really, really well. Good morning, Erica, as well. Lovely Erica, 2P as well, and Nit, who has just joined us. Also, a big shout out. See loads of people streaming in now to join the show. Big shout out to all of you as well. Please do remember to be as active as you want in the chat. No spamming, no taking the piss, just good, focused, good questions. We're here for education, content, and to actually spy out some trading setups. Also, Hangry Patrick, my friend, it is wonderful to see you again. Hope you and the snake are well. GOT, hello mate, Tammy, lovely to see you all flooding in. Really, really cool. So, really, really excited. We've got our Congress event starting this week, right? We're just about to announce some of the speakers today, so keep an eye out on that. Super excited to be part of it. We've got some amazing people coming onto the show. Do make sure that you're involved. If you're not signed up, it's completely free. It's our 5th event. We do this every single year. We get some of the best names, speakers in the industry on there. We share loads of alpha, giveaways, trading competitions, our workshops, basically everything that you could possibly think of. So make sure you're involved and that you're a part of that, because I'd love to see some of you guys especially involved with some of the giveaways. Whack, I love that. 9-year-old is sat in front of the charts. Well, let's absolutely not disappoint the little legend then, shall we? And let's take a look at what we've got. So I've just popped on the ETH chart at the moment. So actually what I wanted to do today was, as we're coming into our trading session, sort of the London afternoon session, but really focused and aligned with the New York AM session, I wanted to take a look at a few bits and pieces, because my feeling on this, just zooming in on ETH, I'm not really going to kind of beat about the bush today. I want to keep this session a little bit shorter and quite punchy. If you guys have got anything you want us to take a look at, I will run back over the ones that we've been following, which is Anchor, BNB, Algo as well, just to see how those kind of setups are progressing. But basically a lot of cryptos at a very similar point at the moment, right? Which is, I'll zoom out a little bit further in a moment, but once we've run a key long-term high or low, which is our external liquidity, our external range liquidity, our expectation is for price to come back and rebalance internal liquidity, right? Which are in the shape of our fair value gaps. Okay, so here's an example. See this green line? We ran this high here. The expectation is then for price to draw down to find and rebalance a fair value gap, which we got here. Yeah, we can see what happened. Price ran up, took this high here, with these nice long tail wicks drawing price back down. So within this little kind of microcosm here, our bias is temporarily or short-term bearish, because we're looking for a corrective move back into here, right? But it doesn't stop the fact that we're long-term bullish. So when we get this interaction in here, which I'll just mark out here, it's a sign that we're then looking to switch our focus to looking for long trades again, to jump back on side with the overall trend. So let me just mark that as down. And what we're going to do very quickly, just for anybody that's new to the stream or anybody that wants a little bit of refreshing, we're just going to slap replay on here, and I'm going to take you into this red section to just kind of show you on the lower time frames exactly what I'm going on about. So I'm using the daily really as my high time frame to frame what price is doing. This is where I'm looking for price to move from external to internal liquidity. This is where I'm really looking and asking myself the question of, where is price reaching for? So our assumption here is that price is still reaching higher, yeah? But within that, to make any trend healthy, we want to see impulse moves or expansions, then consolidations as price collects itself, fuels up for that next move higher. And we see them in the form of running external liquidity to internal. So the fact that we've run this key high here, means that our expectation is now for price to cool off a little bit, search to rebalance a fair value gap. Now, we don't know how far or deep this is going to correct. We can use our premium discount range, which I'll go over again in a little while. But ultimately, when price is moving in a strong nature, we can see a very similar situation here. 1080p is back. Awesome. I know that our technical department have been going pretty hard with YouTube and StreamYard and people like that provide the services. So that's really, really cool to hear. So look, when we took this high here, this is just showing the same thing in principle. What we're looking at here is price then rebalancing the fair value gap, right? So this one. So internal to external, right? So that would be grey because that's our FVG. So prices run this high, also ran this high. So now the expectation at this point, because we're in a bullish market structure, low, high, higher low, higher high. Our expectations now for higher prices. So when price rebalances this fair value gap, our thought process is that we're going to get higher prices here. Ultimately, we don't. But you know what? That also tells us a lot, right? Just get rid of that quickly. When we close through it here, that means that our expectation on this daily candle is for price to be expanding lower to these lows or ultimately this low. Why? Because our internal range liquidity has been violated, right? Meaning that our trade plan is that we find support here and move higher. We close below it, meaning that we then switch focus and we say to ourselves, right, where's price reaching for? Remember that price, in my eyes anyway, and in the eyes of the great mentors that I've been fortunate to have over the years, people like ICT, people like SC, right? The price is ultimately looking for liquidity, right? So hunting old highs, old lows, or to rebalance fair value gaps. Now, with that in mind, if we violate a fair value gap here and we say, okay, well, this isn't holding price. This isn't offering us the launch pad that we need to move higher when we close below it. Our expectation is then that price is going to be looking to be offloaded at lower prices. So we look for the clear and obvious areas that can happen. Old lows in the form of these, or especially anywhere like equal lows like this. Okay. Now I'll do a separate session on this when we're looking also for price leaving what we would call or ICT, we call low resistance liquidity runs. I call them kind of liquidity clusters, which is when we have these untapped lows. We see this one here, we see this one here. At the time, we then had this one. Price runs up to here, confirming the low, and ultimately price is then attracted to these liquidity pools. So with that in mind, let's focus on our red box very quickly, just so that we can smash through this and get onto some charts for some other assets and look at some setups. We've run this high, So where we've got our red arrow within this red box, this is our little microcosm, this is our little climate that we're looking into. Our bias is bearish here, meaning that we're favoring short setups, Ultimately, when we start come down into our fair value gap to rebalance it, this is then, let's do this. Let's make a border on this, just so that we don't have to have the fill color on, so that we can look within this here, right? Because ultimately we're bearish till here. When we engage with the fair value gap here, we switch back in line with our master trend, which is bullish. And this is where we'd really look to put our foot on the gas. This is where we're really looking here to say, okay, we're back in line with the trend. Let's really look to execute. I'm now going to drop this down to an hourly chart. We can see our red box. Now remember, from here we're bearish. So what are we looking for? We are looking for opportunities with inside our kill zones. That's certainly what I'm looking for, which are our little dots down here: London, New York AM, New York PM. My focus is on trading the New York sessions, right? So as we get to here, do we get an opportunity to go short? Let me just put a vertical line here so it shows you, because obviously on the hourly. So this is our execution line, in line with our bias. Why? Because we've run a high. And we're now expecting price to draw down to our grey box, which is our daily fair value gap. What do we get? We run the high. We can see here, we get the sell-off. Obviously, we would look to execute on a lower time frame, but ultimately what I'm using the hourly for is to find key highs and lows and arrays, meaning fair value gaps, meaning order blocks, breakers, that align with my bias. So what does that all mean? Well, if I'm planning to execute my trade here, then I'm framing that off the basis that my daily bias is bearish and that my 1 hour bias is telling me that we have run the high of day, which is also Asia's high. So we can pick whichever one of those we want. We label it up. We'll say high of day, and actually we'll add it afterwards as well. Asia high. That's our liquidity pool that we're seeking for lower prices, right? The same as we would do here. Again, in line with our time and price, what are we looking for? We're looking for price to engage. So we've got a nice clean daily high here. But what we're also doing here is we're rebalancing this FVG, this fair value gap, right? So let me just move that down to 0. We can focus this back on grey. Yeah? So does this make sense to everyone? Ricardo Ruiz, my man, this is London calling. It is exactly that, my friend. So, without going too much into this, again, look, the reason we're bullish here, so again, do we get a setup here within our times here? We get one in New York PM, yeah? So let me just zoom in and give you these couple of examples here so that we can take a look, right? So let's push our replay back, and then let's just drop this to an executable time frame. I quite heavily favour the 5-minute time frame. If I'm looking to lower time frame trade it than that, I will trade on the 1 minute. But ultimately, I really like the displacement that we get on the 5. So I'm not going to run into the details of the setups. You can have breaker setups, you can have breaker line setups, you can have sweeps, retraces, and rebalances of fair value gaps as your entries. What I really want you guys to focus on, if you're of interest in it, is looking for what price does, right? And how it reruns these. No, yeah, not too late to at all, mate. Basically, we've just framed it out on the daily using our bias of the idea that price is running internal or external liquidity, external being old highs and lows, internal being fair value gaps. This grey box that you can see on the screen, this really large one here, is where our expectation that price is drawing to. When we get here, we're expecting a bullish reaction in line with our bias. What we have here are these beautifully equal lows that get run, yeah? Then we have our shifting structure here. Okay, and this is then our trigger to go long, first targeting these highs and then these highs. So we're now going to move back to look at one of our bearish setups, or we'll look at both of them quickly if you prefer. And again, right, remember we drew this line on here. Why? Because that was a key high from the prior day, yeah? Or actually, it's the high of day and also Asia's high in here, as we can see by this line depicting the session. So that's really key. So let's make sure that we've got that in there again, which is our high of day and Asia high. Ultimately, we get this run up here. We also look to rebalance this hourly fair value gap that we drew on, right? Price engages here. What are we looking for, right? We're looking for sweeps. Yeah, so local liquidity to be taken, which we can see here. What do we then want to see? Well, then we want to see a shift in structure. So we see this low, which is also an intermediate term low, meaning that it's rebalancing a fair value gap. So we give weight to that. Just move that back so it's a bit neater. And then we get our breakdown with displacement, meaning that we're then looking to go short in here. Where to? Clear and obvious lows. So we would first target this one, and then we would look lower to here. Okay? If we just look very quickly at our last setup, where we had a really lovely clean sweep, didn't we, of Asia's higher and London's higher. We have our sweep here. Here we get our breakdown. Just drawing our local sweep here as well, so you can all see that. So high time frame sweep in line with our bearish bias. This is where we're hunting for short trades because it's, let's put it to the start of the session, within our New York AM session. What happens? We get the breakdown with displacement, and then we're looking in here for our short setups. All right. So that's just a very, very, very quick overview for you guys in terms of what we're looking at. Now, what I want to do here is just immediately zoom back out and look at our high time frame. And what I want to focus on today, guys, is looking at our current setups and ideas, right? Because as I said, my expectation, which is never really a popular one when you're really, really bullish. So sometimes I think it's more about me providing context. The reason that I'm short-term bearish here, and I have been since here, is because of this. Right? We zoom out on a weekly scale, and quite simply, we've taken this high. Why is that important? It's external liquidity, yeah? It's a key old high. So now if I go to a daily chart, and we compress that down, let me just move this back a little bit so that's not too in the way. What we can see here is it's this high, yeah? So our high time frame, that's key. Why is that key? Because there'll be stops above here. And let's just very quickly look at what happens when we engage typically with daily highs and lows. Right? So two principles here I really want to stress. Remember, like I said to you, and you'll see this drawn on my chart, especially on lower time frames. Oh. Right, and we're going to do this in green to show the money factor, right? Untapped low, untapped low, untapped low. This is liquidity that when you get to a certain reversal point, price tends to hunt these down, right? So what happens here? To go back to the point of what happens when we engage with an old high or low. Engage with an old high, corrective move lower. Where to? Towards this fair value gap, ultimately supported by this order block. So remember our theory, external liquidity taken, internal liquidity rebalanced. Yeah? Doesn't mean that we're then just bearish, this is going to Hades. It's short-term bearish for a corrective move to then get us on board so we can be bullish again. And I really, really stress this with things when we're looking at Anchor, BNB, Algorand, especially with Algo. We were looking for pullbacks, in which case we reduce our exposure to risk because we're counter trend trading. For that, I mean here we're clearly in a bullish uptrend. Yeah. So while we're here, we're favoring long setups. That means when we counter trade, so on an intraday basis, we're looking for shorts here. We're doing so by reducing our risk. Yeah, so it reduces our exposure because we're going against the high time frame trend. The trend is our friend until the end, right? It's a good statement to remember. So when we rebalance here, and our expectation is for long trade setups, we're then targeting this higher because we've gone from external to internal, internal to external. Then here, we're looking to go from external to internal. On our daily chart, where's the clear and obvious internal liquidity is here in the form of this fair value gap. We don't, in fact, respect it. We close below it. This becomes an inverse fair value gap. And then, as we've got here and here, showing a key reversal in trend, we then start targeting the liquidity, which is in the basis of this, which ICT students would know as LR, which is low resistance liquidity run. Okay? So that's why when we engage with a key high or low, as we've done here, there's no difference over here. My expectation from the day we ran this, and for anybody that wants to kind of look over that or kind of look at how we kind of ran that in a slightly more detailed way, then I would recommend looking back over the webinars from last week, when it was really lovely being live with you guys every day. Actually, I found it a lot of fun. And it's nice because it also helps hold accountability, right? For the trade setups that I'm discussing with you, for what my theories and thoughts are on the market. So we run this high. This is why I'm now looking for a short-term corrective trend down to here. Ultimately, we're high time frame bullish. So what am I talking about here? Well, I'm talking about something like this, where we see a corrective move down into here. Yeah. And then we see what we need to see in order for price to continue higher. Ultimately, if we don't get this and price breaks down further, violating our fair value gap, then we can then start to say, okay, price is actually going to move to some of these lower targets down here. But until we get that, we retain our high time frame bullish bias, all right? But as intraday traders, or as myself as an intraday trader, I'm looking to play these interim moves as well as the main kind of moves. And actually, if anybody's interested in seeing how I apply this to higher time frame positioning, do let me know, because I can show you how I would implement this on, say, like a monthly, moving down, looking at monthly, weekly, daily in terms of looking for positioning. So good question here from Gio. So does the fact that we've also just touched the bottom of a weekly fair value gap play into the basis of your analysis? Yeah, it absolutely does. So let's take a look at that for Geo as well. So are you talking about this FVG over here, Geo? The one to the left? Because what we can see here is how this already provided a brilliant draw on liquidity, right? Because again, we're just overlaying the same principles here. This here is external range liquidity. Yeah, perfect. All right, mate, I'm spot on with you. There's our external range liquidity. Let's make that red again. Yeah, so what's the expectation? Price then takes external range liquidity, continues to break down, ultimately takes external again here and here. Now, we stop here. What's the expectation? In fact, we just zoom out a little bit further, you can see that there were other ones that came into play further back here as well. So once we take external, which are these are nice relative equal lows as well, then we're looking for price to rebalance internal, yeah? Now, something that we want to look at are our premium discount ranges. Right, meaning that this is our dealing range. Price took a high here, took the lows down here. So when we get this corrective move, we're ultimately looking for price to retrace back to our red box. Meaning that while we're in the green box down here, we're favouring long setups. Now look how fruitful that would have been as that's played out over all this time, right? And you can overlay it with anyone, yeah? So this isn't just a case of cherry picking. What you're looking to do is say, okay, where was the last sweep of a low? Here. Where was the last high broken? Up here. So if we were looking at our dealing range here, oh, that effing space bar, hang on. How many times I click that and then it just jumps to some random chart. So if we're dealing our range from here, we've swept lows, yeah? We've now expanded and taken out highs. So this is our dealing range, right? So the time that we were in here, these were our expectations while we're within this range, favouring short setups from up here when we engage with key levels. So for example, we've taken this key high here, yeah? So swing higher, we're up. We know we're up high here in premium, meaning that we're favouring short setups. I would confirm this when we close the first down close candle, yeah? So as we did here, before we had this price action, that would have been our dealing range here, right? So first down close candle closed here. This gave us our opportunity to go long again within this bullish fair value gap. Ultimately, price then moved higher. So we can expand this leg higher. And then when we get this down close candle here, we then play to the lows. The other thing to note as well here is that in taking this low, we create a secondary dealing range. So then when we close this candle, we get the opportunity to go long here, which you can see takes us up. Ultimately, all these short setups in here are what got you on the right side of this flush lower down. So just to kind of explain that for anybody that doesn't know, but going back to Gio's point here, we can see why, well, certainly for me anyway, this fair value gap here is so key. And this is the one that Gio's talking about. Now, why do I think that that's key? And why, for example, when we got an interaction with it here, was that important? Change that. Because look, it's our first fair value gap here, yeah, up here in premium, meaning that that's where we think price is drawing to. So ultimately, the fact that we're coming up and we've kind of engaged with this again here, yeah, I do expect price to move further up into this. We had an initial reaction down here, obviously, which was a very, very strong one, catalyzed price away, and we ultimately broke down. Why? Searching for liquidity, searching for that fuel to move price higher. So I do look left on the charts. One thing I would say, Gio, is what I try not to do is I try not to let this guide me too much. I try to focus a lot more on my current model, whether we're in a buy program or a sell program. So, for example, I'm monitoring the key highs and lows to the left of the chart. Yeah, and I have got an eye on the fair value gaps as well, because as we can see here, you know, these play a really, really big role, because when we inversed this, we closed above this one here. Yeah, we can see that ultimately this then led to price being able to draw higher. So it does tell us a lot. But for the sake of clarity, what I tend to do, and let me just zoom back in on a daily chart here so we can see it, is because we're in a buy program here and we're on the buy side of the curve, my expectation is that we're moving for highs to internal, yeah, so from old highs to rebalance lows, and for order blocks, yeah, which are our down close candles, and they become valid once we close above them, or you trade above them. That's up to you to decide that and work that out in your testing. And then we're looking for these to offer support, yeah? So ultimately, at the moment, the reason that I was expecting a draw back into here, and we can see that I had a premium discount range lined up here as well, is I'd quite like to see price draw back down here into discount so that we can get those high probability long setups. However, it's very, very important to note that you don't always get that. right? When price runs really, really strong, as we got here, yeah, we can see that although price engaged with this fair value gap, it was in fact up in premium. Yeah. So again, you need to know your risk parameters, your tolerance for this. If you're in doubt, yeah, what I would say is when you're looking at these, if you want to look at them as pseudo sort of support and resistance levels, typically consolidations lead to continuation. Yeah. And what do I mean by that? It's like that sounds like a nonsense statement, doesn't it? But actually, it's not when you look at it, right? So this is a reversal, right? See how it's got that V-type nature? V-type nature, price retests this. See the consolidation that's in here? Price ultimately breaks down again. Yeah, we consolidate. We have power of 3 in both of these situations, right? Which is consolidation, which we'll do in teal, that color. Yeah, why not? There's our consolidation. Here's our consolidation here. Manipulation. Manipulation. Distribution. Okay, so from consolidations, you'll get these consolidations. Often price will swing the wrong way to trap traders on the wrong side, generate liquidity, ultimately rebalance this fair value gap that was created at the reversal. Yeah, and then we get the manipulation and price distributes lower. So from consolidations typically come continuation. Again, let's just look at that and put that into practice. See this V-shaped recovery? Yeah, that's what we get. V-shaped recovery, price comes up, consolidates here, expands higher, consolidates here, expands higher. Small consolidation here, expands higher. V-shaped reversal, consolidation, sells off lower. Yeah, consolidation, sells off lower. V-shaped recovery, consolidation, higher, comes back down, consolidates again, higher again. Yeah. Now this one I give you, and price never works completely cleanly. We have this sharp move up, then this sharp move down. Price kind of does consolidate a little bit here. But what I will say is look at the directional bias of these upside wicks. Yeah. You can see price getting driven down here. Ultimately, we've broken down, we consolidate, we break down again, consolidate again, break down again, right? Now here, see, we didn't get that V. We did get that big buying wick. I was a little bit dubious of that because we had this consolidation here. Then when we ran these highs, look what happens. Run down again, come back up, consolidate. This was a tricky one, right? But this was a big manipulation to the upside to get people involved before we had that big flush, yeah? Then up, V, retest, expansion higher, consolidation, price moves higher. Now we're saying to ourselves, right, if we're being drawn to this grey box, yeah, which is our high time frame fair value gap, then is this the consolidation in here that's going to push price higher? So if we just look over the last 4 days, and again, weekend price action, is typically low volume. But we can see here just on a low time frame, let me get rid of this range quickly. But this was using the same principles as a dealing range. We've taken these highs, taken these lows. So I do this on my own chart with a slightly kind of more subtle array. But if we look at our dealing range here, we're favoring short setups from here. Now, ultimately, we also need to factor in the fact that we've had an expansion and we're now in a consolidation. We're still favoring long setups overall. However, what we're looking at here is, okay, if price is trying to drive lower here and it's struggling, yeah, we want it down in our green box. We ideally want it down in this fair value gap on the hourly, yeah? That would be ideal because we take out that low, slam into here, find our long setups and look for moon bags. If that doesn't happen and we close below it, then price has kind of given us the indication that it's ready to move lower, in which case we start targeting these, right? So can we see these again? If we draw our dollar signs back on there and make that green again. Yeah, that's what I was looking at down here for this corrective move. Now, I don't trade at the weekends. I actually really like to see how price action even develops on a Monday, so we have Monday's range and levels to use for the week playing forward. But the same principles, yeah? See this? That was the same thing that was here. Yeah? So all these untapped lows, what happens? Price moves up, this becomes a really juicy liquidity target. So ultimately, we've then got them back over here in the shape of untapped, 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 and then we did run them here. Yeah, we came into this area, we had a bullish reaction, and you can see these areas as you watch price develop, right? Price is hunting for these things because large accounts, major institutions that are using monthly, weekly, daily timeframes to enter positional trades need really, really large size to do it. And especially when you step into the cryptocurrency realm, we all want that mass adoption. We all want this to become more mainstream, to have the impact that it's for so long, so long has been there. But the more you get the mass adoption, the more you get the major players in this arena, the bigger liquidity you're going to need, because the big boys play with huge sums of money. Hedge funds, banks, commercial entities. You look at the volume and the currency that's traded in the FX markets and the equity markets, right? In comparison, crypto markets are very small, right? So henceforth, you need the bigger positional sizes, and when the bigger players step in, they really, really can move markets. So get rid of that for a minute and just clean this all up. So thought process for ETH is that I think we're looking to push higher, towards this weekly fair value gap. However, what this did give us the opportunity to here is, as we can see in line with all of these, we could get short here. We had the opportunity to get short here, and we would have even got the opportunity to go short here. Yeah. Again, not really one to trade weekends, but we keep with our system. I did note up a couple of trades for you guys yesterday, just to show you that this does work on the weekend. So this would have been our real kind of decent winner here. All the same principles, right? We've run our lows. We've got the bias that we're now rebalancing. We're looking to move higher. So intraday, we're looking to take out the London lows that were in here. We have that nice run. We have this beautiful clean expansion. And this is, people say to me about this, how do you get the, know when to enter? So for me, my most common system is looking for this, right? Which is a shift or a break-in structure, which we get here, leaving a fair value gap. The entry is based on the fair value gap, and then you're just clearly targeting the highs above here, right? Now on this one, you're only a 1.83R trade, but to get in and out on a daily basis when the overall bias isn't as clear, because at the moment we're consolidating. So then when we ran all of the session highs from the day, this was the short opportunity. We take the high, we shift structure. That's the entry based on premium discount level of this move. Yeah, this displacement leg. Entry here, targeting these lows. Ultimately, we didn't get them. Target one, and then we get stopped out at break even. And then what we see here is we kind of get swept at a later point through the night, heading into Asia. Yeah, and then price comes down. So in terms of what we're looking for at the moment, we want to see a little bit of clarity. I'd really like to see some conviction from price to kind of say, okay, we're looking to move higher or possibly lower. And how we can do that is with things like our fair value gaps, right? Because if our expectation is for price, and I'll leave this one in red just to really signify that this is a bearish FVG, right? Because what would have given me the confidence to go short on this one here was the fact that price was reaching up into this bearish fair value gap that has ultimately rejected price here and again here, right? So what would kind of give me the conviction here to say, okay, well, I think price is going to move higher, is if we inverse, yeah? So I'd quite like to see a strong close above this. And what do I mean by a strong close? Well, for price to kind of come up here with some conviction, to close higher than the other candles here, in which case I'd be looking at this to then come back and use this as support, and then we can day trade it level to level, yeah, focusing on these key highs as we move up the chart, and just do that in green. So does that make sense, guys? Yeah, Erica, bless you. Yeah, do smash the likes, guys, if you're enjoying the content, or if you've got any feedback on it, for any criticism, as long as it's constructive. I'm happy for positive and negative. Often the negative criticism you get really helps you change for the better, as is life and as is trading. Yeah, we don't want to shy away from what we do badly. We want to focus on it, improve it, and use that to improve ourselves overall. But if that does all make sense, you have got any questions, we can just overlay this on another chart now and just finish up on that and take a look at some setups that I'd be looking for today on those. So does anybody have anything they would like to look at? There you go. Erica's in there with the win. NXRA. Ooh, I don't even think I've heard of that. Let me see. Come on, let's have a look. NXRA USDT. Yeah, so non-perpetual. Any particular broker? Erica? Let's have a look. What we got? KuCoin, Mexi, Coinex. Do you fancy? Let's maybe take a look on. No, actually. Hey, Hans is in the house. Hello, my friend. How the devil are you? KuCoin. That was a good guess, wasn't it? See, so well aligned in our thinking, Erica. So, now I'm guessing there's not going to be a ton of data necessarily for this, but I could be wrong. So I'm going to zoom out and start on the weekly. Awesome, awesome, awesome. Right, so again, on the weekly, what would be quite telling for me here is this. Again, we're looking for our external to internal, internal to external, right? Framing all the time around our bias. So what do I mean by all of that? Our bias is bullish. Why? Because we're setting higher highs and higher lows, yeah? And we continue for this nice progress. So the first thing I'm going to mark out in terms of a weekly level is this. Why? Because that's our all-time high. So there's our all-time high. However, what's my expectation at the moment? Well, we've had a very strong move through it. However, ultimately, when we see these big moves higher, I would like to see a corrective move down. So when we closed this week here, as we did last week, above it, my immediate thought would be to look for potential counter trade short setups, drawing back down into here. Yeah? 2 p.m. show and mess around my schedule due to me being... No worries, Hans. Absolute joy to have you here, mate. Forget how well aligned South Africa and UK time is. Okay, does that make sense to everyone? Yeah. So we've taken this high. So now our theory is, okay, price is going to probably, the high probability is that it comes down to rebalance this and then makes a move on liquidity resting above here. We could see a very shallow correction here and a huge attack on price, but we can always play that as we look on the lower time frames. So now as I'm moving down to the daily, we can see we've had this kind of initial corrective move here from price. Now, we've traded above this, so we've formed this down close candle and we're now trading above it. So again, like I said, you need to make the assessment yourself whether you need to see a close above or price merely trading above it. But let's highlight this here. And why is this important? Well, when we're bullish, our expectation is that our down close candles defend price. Yeah? So when we trade above them. So actually, this was the down close candle here. The opposite is true of up close candles, right? So let me show you what I mean by this. When we have this expansive move higher and we get ourselves into a buyer program, yeah, what we're looking for is this up close candle here. Yeah, when we set this down close candle after we have this corrective move, we want to see these adjoining candles support price. Move it down to the wick. Yeah, so what we see here is down close candles here. See, we close just above it here. The expectation is that this is going to support price. It might dip into it, right? But this forms a barrier. If we close below this, we violate this, as we do in terms of inverse fair value gap. We would then look for liquidity lower down in the form of these kind of relative equal lows. All right. So as we see this, then when we come up and we set this, same thing applies. But we want to see a move beyond it to validate that order block. I wouldn't move to these order blocks here or necessarily this one here. I'd be holding this one because it still has such relevance. Yeah. So that acts as our support block and we can see how well that did moving price higher. In the same vein, we can see here what happened in the same regard with our down close candles, with our up close candles, sorry, in terms of a bearish perspective. We can see how well price got defended here. Price re-engaged, sold off, re-engaged again, continued to sell off, formed a new set here when we move below it here, and ultimately then defends price on the way down. So we're kind of caught in two minds here because we're saying to ourselves, look, we've run a really key high time frame level here in the weekly. The price has kind of set this order block and now we've moved beyond it on a daily scale. This is our draw on liquidity. Yeah, so that's where we expect price to move towards. But ultimately, we're looking for price here to hold this order block. On a weekly scale, we were looking for an initial pullback in price, meaning that what we want to see is we want to see the day open. Yeah, Then we want to see it draw down to take some liquidity. Then we want to see it expand to a high. And then come in for a close. Yeah? So open, low, high, close. So what does that look like on an hourly time frame? Well, we can see if we'd been trading Asia here or even London, we could have taken in our bias that we were pulling back where to this order block. Yeah. So you see how we kind of overlay it now. It doesn't always look like it makes that much sense on the higher time frame. But in our London session here, what did I tell you on the last ones, right? We're playing our intraday bias, which is coming down to here. We're looking for sweeps of highs. Yeah, look at this liquidity up here. It's just begging to be taken, by the way. When you see this kind of like, looks like engineered liquidity, right? These equal highs. So we come up, we have our move lower with displacement. Within here is where we would have been looking in London for our short setups to play the pullback. And where to? Well, first thing we can look at here is our bullish order block. So would we have got some setups here? Let's look at our 5-minute chart. Okay, really interesting. Start of London here. You would have come into this move with displacement. No sweep, I think they're level. Let's have a look. High is 105,000. High is, yeah, all level. I wouldn't take those guys, to be honest, although we did get a really nice little breakdown here. We get our shift of structure, price returns to our fair value gap and ultimately sells off. So although the trade worked, in truth, I wouldn't take this not without it moving above this high to really kind of engage liquidity. I would have favoured this one, but ultimately we broke down here, didn't retest it, and also it happened outside of the London session. So now, in terms of what we want to look at for trades looking forward, yeah, if we look on here, we can see we've had the highs run, yeah, price is now correcting down, but what did we say? A high time frame bias, we're looking for this daily order block in here to support price, yeah? If we're going to get support of price, we want to hold this order block here. Price comes down and closes below this on an hourly scale, then I'll be monitoring this here. Yeah, this fair value gap that lives in here. Why? Because that's the next point that aligns with our high time frame bias, where we could be looking to see price come in and react higher. We don't know if it's going to do that, but ultimately closing below here would give me a signal that price is driving down to find liquidity deeper. In terms of playing this corrective move, I'm not really interested in shorting this down to here because it's a very small percentage move, but also because ultimately we're looking at this whole area here offering support. Something else we can do here as well, when we zoom back out, is just overlay our premium discount range because it has a 50-50 split, and we ultimately want to see the equilibrium of this daily order block here. We want to see the EQ, which is the 50% of that, hold. Right? So for me, I think the other thing that we want to do here is just very quickly before we finish up is just take a look at our traditional markets, just so that we're aware of how they're aligning. The idea today is that the DXY is going to be a little bit bullish, because ultimately look what we did here. And this is why last week when we talked about this, I was saying that I expect more bullish price action. And again, I'm always happy to be open to people's critiques. People were saying, okay, well, why we've broken down, we've lost this key level. Well, yeah, unless this is a deviation, a liquidity sweep below this level, and now price is moving higher. Ultimately, for me, when we close below this order block, not moving down to take out this low, coming back within the range here was a sign of bullishness. When we closed above this fair value gap here, yeah, then ultimately, in my mind, I'm then looking for price to move higher because we violated this. If this was doing its job and this was setting you up for lower prices, yeah, then we would have held in here, in my opinion, and then looked to move lower. Okay, so we didn't do that. So as we did, very similar, just to use an on-screen example with this one, when our expectation here was we set this fair value gap price to draw into this and for us to find long setups to go long, Well, it didn't happen. We closed below it here. So then our expectation is for price to hunt liquidity below this low. Yeah. If it hasn't found the continuation setup in there, the chances are it needs to find more fuel lower down. So the same theory applies here. If it hasn't found the continuation setup here to go lower and it's closed above, then it's showing strength. So then we want to look for our inefficiencies higher up, like in here, and ultimately this high up here, which is harboring liquidity. Now, while that happens and while that's going on with the dollar, we can typically expect risk markets to be a little bit weak, right? Risk markets like NASDAQ, for example, and our S&P 500. And that also plays its part when it's handed down into cryptocurrency as well. So again, I'm approaching today with a little bit of caution. Let's just finish back off on this chart quickly for Erica. So we're playing today out with a little bit of caution. However, I do think at the moment, the one thing that you always have to factor in with crypto is that when it wants to run hot, it can run really hot. Yeah. So I think we've got Atom today is a really good example that's running really hot, which is kind of, in some ways misaligned with what we'd say our traditional market bias is. However, we want to trade what's in front of us. Okay. We need to remember that we're overall bullish on these charts. But when we start tagging off prior day's highs or key liquidity areas, be patient, wait for that kind of reaction, and then look for the setups that you can have, right? So, for example, I think that was a run of a high there. So that daily high, I think maybe we just tagged it. Let's have a quick look. I think it might actually just be real serious. No, they're all. So 1, 2, 3, 4 of these highs are all at the same level. So for me, that adds a little bit extra into this in terms of looking for the fact that we could find support here and then look to attack those highs, purely because there will just be so much liquidity resting above here. And the real kind of sick thing that the market does on quite a regular basis is we'll run this, everyone will be like super long from here, people will go late long here, it will do something like this. All right, to just take the liquidity that's above there, get everybody gig along on here, take all that liquidity, fill it with sell orders, and then run it back down, maybe to here before it then continues even higher. All right. So be aware of where liquidity is resting. Yeah, these old highs and lows. Once we've taken liquidity from a set of highs, expect a corrective move down to a fair value gap lower. Yeah, or certainly an order block. And the same if we take the lows as we did down here. Yeah, external, wait for your run into internal, which is your fair value gap. When you close above it and it shows you strength, then you can start to look for targets slightly higher up. All right. Anthony Riviera, apologies, my friend. I only just see you jump into the chat there. I'm just going to answer one more quick question from Nit. But I'm going to try and get live tomorrow, mate. If I don't, then should be live on Wednesday for the start of Congress, or will be around. I'll absolutely take a look at some of those charts for you. But what I would say is that AVAX is very much on our hot list at the moment. So I think whatever you're doing to kind of pick that one out, very much so. That's for our fundamental team and our market analyst team as well. But this is a really, really good question to finish on, right? Which is from our dear friend Nit. Are you able to explain how you determine the dealing range and the premium discount range, and why or where you determine the range from? Of course, mate. So again, for me, being a simple creature, I always try and keep these things quite simple. Yeah. So let's just keep it on the chart that we've got at the moment, so that we're not cherry picking. Even when we're in consolidations, this is the same. So the key thing for me, in determining a dealing range, is I want to see a high or low swept. Yeah. So when this high was taken here, price then came down and took this low out here. Yeah. So swept this high, took out this low. For me, we've taken liquidity from the high, taken liquidity from the low. Now, I'm not really focused on these little smaller internal moves. I want to see a key move and then an expansion. Yeah. So then on the close of this candle here, my dealing range is anchored from the bottom of that candle, to the very top of this move, which is right here. Let me just move that back so that's actually in line for you. Yeah. And then we basically run that range until it breaks. So we see here, we set the range. When this high is taken, this low is confirmed, price then moves back up. We favor short setups from here, which was our New York AM session, which worked really well. Long setups from our New York PM session. Short setups from London. And probably not in here because we're down now. Okay, yeah, long setups from New York AM. We then broke through the top of the range here. So then you need to say to yourself, okay, well, have you got another key dealing range within here? And if you haven't, then you would just expand that range up higher. And if we draw that across to where we are now, we can see how really well that served us. Yeah. So if you're right on the periphery of the line, I would always recommend looking for the key sweep and what side that happens. So if you get the key sweep on this side, as we did here, then I'd favor short setups because it's been triggered in premium. Down here, we can see we got a nice long setup from down here, short setup from here, long from here. We would have been favoring short setups from here, but we didn't get one. And our London short setup would be there as well. So yeah, sure. Why would I not? So let's pop that on. Thanks. So that would have just been a separate dealing range. Yeah. So this dealing range here, for example, which I think is the one Nit's referring to, was we took this high here, we took this low here. Now you see what I mean, right? We took this low and we had a key expansion taking out this high, right? So for me, that makes that, a key move. Even this one before it, right? So we took out these highs here, and then we took out this low or this low here, meaning that this move down here is a dealing range, right? So from here to here. And then when we expand beyond it here, it would be to here, because we expand it down for this candle, because is that taking a key high or low or had an expansion? No. So I extend the range down, meaning that, I've drawn that the wrong way because I've drawn that from high to low. 1 second. Meaning that we favor our long setups from here, here, yeah, and we favor short setups. But when we close above this range here, we then need to say to ourselves, okay, well, where was the last liquidity sweep from the low, which was here? So we would then draw another range from this low, and we've swept liquidity from the high up here, which we extend higher up to here. And then this becomes our dealing range here, meaning that we probably would have just snuck down to get a premium setup for a long here, which we didn't quite get. However, the reason I've now drawn this one, if I just move this back to here, is we can see that we take a key high here, or this one as well, and then we have an expansion lower, right? Meaning that price is now in a separate dealing range, which is this one. So we then move away from this range and into this range, yeah? So hopefully that makes sense, mate. When we're inside a dealing range like this, yeah, and we set another dealing range, you can choose to then use this as your dealing range. But ultimately, for me, we're still trading within the confines of this. With this one, we've had a huge expensive move higher. We've taken a clear high, taken out a low with expansion, or certainly with some kind of impulse move lower. So that, for me, then means that I think we're going into a consolidation here, which means that I want to make sure that I've got the current dealing range of price. If we then pinged straight out of this and started to moon, I would then wait for the consolidation, and I would then redraw it from there. All right. So focusing on this range here. Awesome. You're very welcome, mate. Always asking good questions, Nick. So then for this range here at the moment, we can see why this helped us retain our bearish bias here. And that's why, if I just extend this across, I'd really like to see price come down into this area here, ideally this hourly fair value gap, where we could then hunt for long setups while we're down in discount. Yeah. Targeting these highs, which is for me just 3-4 highs all at the same level, just begging to be run. All right. Anthony, again, apologies I didn't get around to your question, mate. I was trying to keep this a little bit short today, still pushing it towards an hour. But if I'm live again tomorrow, my friend, pop on and I will promise you that I will make sure to cover those for you as well. If I get any time later on, I'll do a little Twitter update on AVAX as well for you. So, guys, thanks so much for being live with me today. Please do remember about Free Trade Congress. There's going to be webinars like this, 3, 4, 5, sometimes more coming up every single day. We've got workshops. It's starting on the 15th, running through to the 21st. We've got some of the best names in the industry coming on to share their knowledge with you. Yeah. So go on there, make the most of those people that are in there. We've got macro analysts, we've got algorithmic traders, we've got price action traders. We're going to show you some of the lineups of people that we've got coming on. We've got CEOs from some of the biggest exchanges in the world, from the decentralized exchanges as well. You are really, really, really going to love it. And it's all for free, You can find the sign-up details in the description below, and you also get free unlimited exclusive Nest Club access. That means you get the highest level of access to the Burbness paid memberships for that whole period as well. So come and get involved, give us some feedback. Enjoy yourselves. And like I say, if you've got any feedback about the streams, please do let me know. Mr. J5, awesome, mate. Awesome. I hope you like what you see. And do you know what? If you don't, even better, let me know. Let's get a discussion based around of it on one of the shows. Yeah. So thanks very much, everyone. I'm going to go and get my head into Congress now and also look to see if we've got a few cheeky setups that we can get going for members this afternoon. Do come and join us. And if you've got any questions, just pop it in my Twitter, BC_Richfield, or pop it down on the chat. Have a great week, guys, and I'll see you either tomorrow, certainly Wednesday, and as we fire up into Congress.